Hello everyone, I want to walk through two different trading strategies that we can utilize today, and we can actually utilize them together at the same time. So what I have open is my iMarkets Live web analyzer, which is an amazing tool. It's fantastic. If you don't have it, I highly recommend it. They have a whole series on iMarkets Live education platform that walks you through how to use it. I have it set to the Granville strategy right now, and that's a trend trading strategy. And one of the really nice things here is that we have potential sells and potential calls based on the web analyzer's algorithm and what information you plug into the charts. So this is a fantastic tool. It works at a very high accuracy rate. So when one of these pops up, this last one popped up 9 minutes ago, you can see, but when one of these pops up, you'll get a notification and you can go check out your charts. If you're trading, it might be something that you're interested in getting in on. You don't use it blindly. You always want to make sure that you're verifying it with other indicators, but more often than not, these are trades that you're going to be interested in getting in on. So let's talk about how we can make these two charts work together. Now, when I'm trading, I always like to utilize at least 4 indicators for me to know whether or not I want to get in on a trade. So the first strategy I'm going to talk about is a price reversal. Basically, when we're expecting the market to change course. Now, a common mistake that I see is new traders, and I certainly made it myself. New traders only use one set of Bollinger Bands. So let's hide these out and use this set of Bollinger Bands at standard deviation 2. Okay? So most of the time people think, hey, when these Bollinger Bands get broken, that means that it's going to reverse. It's a standard deviation, so that tells us it's going to turn around. And that's correct, but it's not always accurate in telling us how far down this is going to go. And let's look at this example here, because this is actually a real thing that happens to a lot of people. So the Bollinger Band is broken at standard deviation 2. Our RSI set at 14, which is pretty conservative, and our stochastic have both broken and indicated that this right here is overbought. So we would think, okay, we're going to have a market reversal. But if we had taken any of these for 20 minutes, this remained overbought, and even still, when it's overbought here, we would be in trouble in some of these positions on these trades, even though we have these 3 strong indicators. So if we're trading on a price reversal, what I like to see is I utilize standard deviation 3, standard deviation 4. If you just heard that noise, that's what happens when there's an indicator. So we have a potential 15-minute buy on this USD Canadian dollar. So if we're interested in getting in on that trade, we'd head over there and check it out. I'm going to continue with this. So what we see here is that this didn't quite reach standard deviation 3. I want to see it have a strong break of standard deviation 3 in conjunction with this RSI and stochastic before I get in on that position. Let's see if I can find a case where that happened. Maybe we can look at the 15-minute. Here we go. So I want to see a strong indication that this is going to turn around. So we have this 15-minute candlestick blow through standard deviation and come down and touch standard deviation 4. It also broke the RSI and the stochastic. Why wouldn't we want to get in on a position there? Because what we're looking for is this RSI to actually turn upwards. So once we see it touch that standard deviation 4 and turn up, that's when we want to get in on a potential buy there. So if we're looking at reversal, and here's another indication here. So we have it come down, break through the standard deviation 3 Bollinger Band, and we had it come down and turn up this way, back heading into a bullish market. Our stochastic indicated that as well. So we could get in on a buy there and feel good about that. Again, if we're doing trend reversal or trend, we're trading with the trend, we probably want to stay on a 15 or a 30-minute candlestick because they're a little bit more reliable. Same thing on this web analyzer over here. If we get a potential buy right here or a potential sell, we want to make sure that those things check out. Now, the other strategy that we can use is this MACD. We don't want to use it blindly, but it works really well to tell us which way the market's moving. So if we're using the MACD, we'd want to head over to currency strength, to have a comparison, because this is going to tell us which way these currency pairs are moving. So if one's stronger than the other, for instance, let's just say we were doing a JPY GBP and JPY was first, we'd expect a bullish market, or a GBP JPY, we'd expect a bearish market. So if that's the case, we can head over and use this MACD. I know this is still the Euro USD, but when we see this blue line in a bearish market, if that's what we're expecting, we see a bearish, this blue line cross over this orange line right here like we did. That would be a good indication for a sell. Okay, and now we didn't have other indicators. Had this been oversold up here, that would have been another strong indicator. I'm not sure if I can find one necessarily. Maybe. Okay, here's another good one where this has been, the stochastic tells us it's been overbought. This crosses over. It's a good indication for a sell if we know which way the market's trending. So those are two different strategies you can use. Here we had a crossover for a buy, and so when you see a strong crossover like this, that means that our momentum's headed up and we can try to trade with the trend. But we'd certainly want to check out the currency strength, and we can use that in conjunction with these potential buy and sells, because if you have this programmed into your strategy, it's going to pop up over here and run those algorithms for you. So those are two strategies. I highly, highly, highly recommend this IML web analyzer, especially if you're newer to trading. There's a bunch of different strategies you can play around with. It has all this stuff built in, really strong indicators, and you get this help of a little nudge in the right direction when it senses a good trade. So those are the two strategies for today. There's certainly more. You need to learn the nuances of both of these, but this is what I use with great success, and we'll be back soon with more live trading videos.